We'll come back to this, but we have a lot of earnings to track. And the first corporate that we're speaking to is Kalpataru Power. They delivered a steady second quarter. Revenue was up around 7%, while the company clocked in a margin of around 9.2%, which is still quite soft owing to the higher raw material prices. So the company's order book has also come in at an all-time high. It's above 38,000 crores. To discuss the company's performance and the outlook going forward, we're joined by the Kalpataru Power Transmission Director, Amit Uplenchwar. Amit, good morning and thanks a lot for joining us. This is Pavitra. I want to start by asking you about the margins. Yes, there has been a little bit of an improvement, but it is still the higher raw material prices which are weighing. Do you think that the worst of it is already in and we could see an improvement going forward? And where would you see the margin trend for the full year?
So good morning, Pavitra, and to all of you. So we've predicted at the beginning of the year, although a very challenging year, as you correctly mentioned, to have our EBITDA levels at consol to be 9% and thereof. And I think as of now, we've been holding pretty well. We are close to 9% at the H1. And, going forward, Q3, while we may have some overhang of some of the old orders that were still with higher input costs, but I think as we hit to Q4, this should start to normalize. And I think from a guidance perspective, we should be able to deliver a 9% consol EBITDA as we've promised at the beginning of the year.
Okay, so maintaining the EBITDA margin guidance of 9%. Amit, morning, and thanks so much for joining in. Just a quick word on promoter pledge. I think it's a little more than 50% as of the September quarter, the promoter pledge. Is there any visibility on bringing it down? And if yes, could you give us the roadmap?
So, I won't be able to give you an exact roadmap, but what we hear from the promoter group is that, they are committed to reducing the pledge as we go forward. We should start to see some reductions happening very soon. One thing we are absolutely certain, though, what we hear from the promoters is that there will be no more increase in pledge going forward. So, I would like to put that that's a very positive sign that there will be no more pledge, and pledge reduction should start sooner than later. Won't be able to give you the exact numbers, but we'll keep you posted in the next 2 quarters as we hear more on that from the promoters.
But suffice to say, we should expect that in the next 2 quarters by FY23 end, promoter pledge will be lower than what it is currently?
Yeah, that is safe to assume. Yes. Pledge will not go up. I cannot give you the exact quantum of reduction, but it will be lower than what it is today.
Okay, promoter pledge will be lower. The other question I have is on your orders. So it is currently over 38,000 crores. Can you tell us what part of this is likely to be, commissioned in FY23 and FY24? Also for FY23, your order inflow guidance was of around 21,000 crores. You've already achieved 70% of it. Would you revise this guidance upwards?
So, we are quite heartened with the way things have really moved in the last few months in terms of order booking. And, it's good to see that it's across all our segments that we operate in, both domestic as well as international. So if you remember, last year we did close to 14,700 crores in turnover, and we had, predicted and tried to get a 15% growth in our revenue numbers. And given the fact that we have a robust order book, I think this should happen. We still have, out of this 38,000 that we've booked, while we've done 20,000 crores, we are cautious now. We are already sitting at a 2.6, 2.8 times order book of revenue for next year. So what we want to do is look at strategic entries, as in railways. We've entered the metro segment. We've entered airports in the infra segment. We are looking at more complex water projects. So we are going to be selective. I think towards the end of Q3, if we feel we need to revise the guidance in terms of order booking, we might do so. But right now we are sticking with this. We will go towards converting our L1 orders into firm orders by the end of Q3. And so we are quite happy in the way our order book is shaping up, and our future guidance for revenue looks quite robust at this point.
What's the update on debt? I think it was close to 3,250 as of Q1. What's the number right now? And you had some sales planned of non-core assets. I think Indore sale also, you said, will be completed in the next 12 to 15 months. Give us an update on the debt and the sale of non-core assets. Which ones? How much will it raise? By when?
So in terms of debt, if you look, this you've been tracking our numbers, and always for a contracting industry, the first 2 quarters are always when the working capital goes up. But I think if you look at Q3, Q4 historically, the numbers come down. In October itself, we had our debt go down by 150 crores post H1 numbers. So the trend is positive. If you look on quarter as a percentage of our revenue, and revenue as a percentage of debt has been pretty stable. And I think given our very low debt to equity ratio, I think we are very stable with our debt. Debt has only gone down in absolute numbers. It may sound high, but if you look compared to previous quarters, the trend is exactly the same. In terms of Indore, we've had close to 50 crores of sales that we've already realized. Towards the end of Q4, we should expect another 120 crores worth of inflows coming in, and by the end of next financial year, which is FY24, we should be able to liquidate all the sales in our Indore project.
What's the debt number?
Hello,
Amit?
yes.
The debt number, if you could share that.
So our debt number at 2,900.
Okay.
Yeah. Our net debt is at 2,900, which is, like I said, in terms of percentage of revenue, it's been what it always has been. And while there is enough order book and visibility, we believe these numbers will only come down in the next 2-3 quarters.
Okay, the debt is likely to come down. Amit, one final question. Could you take us through where things stand in the merger with JMC Projects? What is the timeline looking like there?
So we've been on course so far as our merger is concerned. We've received approvals from shareholders. We've received approval from SEBI and exchanges. We are going through our final motions, and we hope that it should be completed soon. We've also used this opportunity to do a lot of optimization and capacity building in terms of both our organizations. We've got a dozen SMEs and subject matter experts that are working on different segments of our business. We've also got more than a dozen startups that are working with us on different aspects of productivity enhancements, etc., across both our group companies. So given that we are on track, hopefully we are, by end of Q4, we hope that our merger should be, formally done in all aspects.
Amit, we'll leave it at that. Thank you very much for joining in. So the order visibility for Kalpataru Power has improved from here on. The order book is at a record high level. They're maintaining their EBITDA margin guidance of 9%. Their merger with JMC will be completed by Q4 of FY23, something the company had guided to earlier as well. So they're retaining that, and there is some progress bit by bit seen on reducing their debt as well. Slip into a break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins us next.